Hi everyone, this is Michael Kramer of Mock Capital. Today is Tuesday, June 17th, and it's around 4:30 New York time. Important reminder, U.S. markets are closed on June 19th. They'll reopen on June 20th. So that means everything is going to be moved forward a day. So tomorrow we're going to be getting initial jobless claims, which have really started to get a little more interesting. We've seen initial jobless claims the last couple of weeks really start moving higher, and also those continuing claims have also started moving higher. Those will come at 8:30 in the morning. Those will be really important to pay attention to because they will probably have an impact on where rates go specifically and the dollar. And then at 2 o'clock in the afternoon, we're going to have the Fed rate announcement. Expectations are for no change in policy, but again, everyone's going to be looking at the dot plot, seeing what the market's pricing, seeing what the Fed is pricing in terms of rate cuts going forward. And then on Friday, we're going to be back. S&P Global is going to be the big piece of data there. That's going to be the flash reading for the month of June, and that's going to call it a week. So a short 4-day trading week here in the U.S. And again, there's a lot of things happening geopolitically as well, and that's causing a little bit of a flight to safety. You're seeing that in the euro, which was weaker on the day by about 70 basis points. But really, more importantly, you can see the uptrend in the euro still very much in place, and you can see we're still holding above resistance at 114.70. So this is the critical area here, 114.70. It certainly looked like we had that breakout. We had good velocity out of it. We've kind of stalled out now. We're testing the we're retesting the breakout, and we're just going to have to see how this kind of plays out now from here. Clearly, you get weaker U.S. data. You get a more dovish than expected Fed. It could be the case that you're going to see the euro begin to strengthen again. Certainly when you look at the RSI, you still have a little bit of an uptrend left. You still clearly have the uptrend. So until we see that uptrend broken, it's hard to get too negative on the euro. Here's your 10-day exponential moving average. We're bouncing right off of that as well. So until we start seeing something breaking, I think you have to continue to think that the euro can continue to move higher. Lots of support in this region, and at this point, there's not enough evidence to really say that the euro is going to cave here. On the pound, it's getting a little more interesting because we can see that we did have a trend line up here. That's clearly been broken. We did break below the 10-day exponential moving average. We're now also, testing support at 134.25. This is clearly an important area as well. And then, of course, you can see the RSI really has broken down. So, at this point, we're kind of looking at a scenario where if the pound really breaks through this 134.20 region, it could be heading back down to around 132.70, 132.5. But for right now, this is not really looking very strong, and it's looking like we could be heading a little bit lower and weaker on the pound. It's also looking like the yen could maybe begin to start weakening again versus the dollar. This has been kind of going back and forth with really no clear direction. It doesn't sound like the BOJ is in any rush to hike rates any further. It sounds like they're also paring back their QT. And so there's certainly the opportunity here for the yen to begin to weaken and head back up towards this 148 area. And clearly see momentum has been trending higher well in advance of any move. So at this point, again, we're looking at a scenario where the yen could potentially move up and weaken versus the dollar. So if the yen's going to weaken versus the dollar and the pound is going to weaken versus the dollar, good chance the euro is going to weaken versus the dollar. And sometimes this is how I work through and solve my indecisions. This would kind of suggest and take us back to the fact that there's a good chance that the dollar just overall is going to strengthen and that we could see the euro break support and start moving down. Again, the oil obviously has been and really been a focus here. We've seen oil get back to resistance around 73. We had an inverse head and shoulders. It certainly looks like at this point we've broken some sort of neckline, and it looks like maybe oil can continue to really move higher here, perhaps maybe even returning into around $80 per barrel. It doesn't seem like it's an impossibility when we look at how things are shaping up currently geopolitically and also from a standpoint of look at the trend and change of momentum here in oil prices. It looks like oil has a pretty bullish tilt to it. When we look at gold, we're really getting no good answers from gold, and I'm going to just delete this line right here because you can see that the 10-day exponential moving average continues to serve as support. Here you can see your uptrend again at risk of breaking. We're just not really seeing gold do what we would want gold to do if it were to continue to move higher. I would think we'd want a little bit more velocity to the upside. I would think we would want to see a little bit more of a shift in momentum. You're just not seeing that yet, but clearly there was an opportunity for gold to really break down, and it didn't break down. So right now, I think it's pretty simple. 34.25 to 34.50 is your upper end of resistance, and support is somewhere around 33.30. Clearly, if you break below the 10-day, you're going to probably come back down and retest 33.30 with the potential to move all the way back down to around 32.25. If you break out, that's great. Gold's off to new highs, probably surpasses 3,500. But until that happens, you can wait and be patient and see what takes place, because right now you're not getting anything definitive when it comes to the price of gold. When you look at the DAX, it's actually a little bit more interesting things happening here. We had speculated a couple of weeks ago, almost sort of reaching at that point, that this was a rising megaphone pattern, and it's actually been playing out almost unexpectedly, because you have seen the RSI really roll over here and now down to 44.5. You've seen the DAX come back to support and now tested a couple of times around this 23,350 region. We've also seen the DAX fall below the 10-day exponential moving average. So at this point, a break of support at 23,400 probably opens the door to filling the gap in this region here at 22,500. If we can hold support, resistance is probably pretty strong right here, because it looks like you have resistance from a horizontal standpoint and from the 10-day exponential standpoint. So this is probably an area where you could see some short-term resistance at 23,750 with a breakout above that sending us to the highs. But this just doesn't look like the type of setup that looks like it's favorable. In fact, it looks like maybe it wants to move back down. When you look at the FTSE, it's also getting close to breaking down. Here you can see the trend line. The 10-day exponential moving average has almost been moving up in a straight line. Here's your support level right here at 8,800. So until we break resist support, which looks like we're getting very close to doing, we could really start seeing the FTSE start heading back to 8,700 again. We haven't really looked at the overlay with copper recently, so I thought we could do that right now. And you can clearly see that copper has actually been weakening and diverging away from the FTSE, and that kind of should be an indication as well that the FTSE may be heading lower in the near term. When we look at the NASDAQ, here you can see today we close just a smidge below the 10-day exponential moving average. We closed at 21,719. The 10-day was at 21,732. So that makes 2 out of the last 3 days that we've closed below. Here you can see our rising wedge pattern. Here you can see the downward shift in the RSI. Both suggest that you're probably looking at a change in trend here. If you probably got a big drop again tomorrow, it would probably solidify the change in trend. If we were to break the 21,450 area, probably sets up a return to and maybe a visit to this region in here around 20,800. There is some good resistance at this 21,175 region as noted, but I would think that we probably moved through that. It certainly didn't offer much in the way of support on the way down, although it was a pretty good level of support and resistance when we were rising. When we look at the S&P, also closed below the 10-day exponential moving average today, second time out of 3. Also has a rising wedge pattern, also has what looks like an RSI that's rolling over. So again, you have some bearish technicals starting to form in the S&P. The DAX is certainly rolling over, and the FTSE doesn't really look very strong, so it really shouldn't be much of a surprise if we were to start seeing the S&P 500 slipping. And finally, look at the Dow. The Dow looks the weakest, actually, of all three of the other U.S. indices. You can see that we bounced right off the 10-day back here on June 12th. It was we fell below it on the 13th. We bounced up to it. It was resistance on the 16th. Today, again, we bounced to it. More importantly, notice that the 10-day is actually starting to roll over. Notice that RSI is rolling over. This kind of suggests that you're starting to see a change in trend forming as well. A break below 41,825 probably sets up a drop back to this area here around 40,800, call it, and then we can always reassess this next week. There is some support in this region, but the gap has already been filled, and it looks like support was already tested. So it's very possible this support's already been used, and we're more than likely than not to go to the next level of support at lower levels. So that's all we're going to have for this week. We'll see you next. Bye.